Welcome to Fantastic Female Fridays. My name is Susan Hayes Cullerton and I am the host of your show here called Fantastic Female Fridays, where we are looking into the issues, particularly focusing on women and investing, so that we can bring together knowledge, resources, and also building confidence as well along the way. So first of all, I'm going to say hello to everyone who's been tuning or who is tuning in, and I hope that you're settling in for an interesting conversation today. Put a lot of research into the subject that we're going to discuss today because it really is bandied about there a huge amount. So I thought it was going to be well worth delving right into the subject and figuring out what is really happening with this conversation, and of course how might it be investable for those of you who are tuning in around the world, as well as of course who are interested in participating in the markets. So first of all, I'm going to say hello here to everybody. So I can see, hello Julie, wonderful to have you back. Delighted to hear that you're back, and I think you're really going to like today's episode. Hello Gash, hi Margaret, how are you? Delighted to have you back here with us as well today. Hello Becca B, good to see you too, and indeed VV Nation is alive and well. So anybody else that's tuning in, hello and how are you? And of course it's always interesting to hear where you're tuning in from, so please do pop the location where you're tuning in from in the live chat. Now, there Glenn is on the show today. Wow, it's great to have you here with us, Glenn. It's always a compliment when you're turning up, which is fantastic. And hello there, Rita Orr as well. Great to see you too. Now, a couple of things that you need to know about today, right? Number one is the chat. I am going to be keeping an eye on all the time, right? So I'm looking over here. When I look over there, that's when I'm looking at the chat, and I can see here Julie is tuning in from Aberdeen. Anuj is in from Korea. A different Julie is tuning in from the UK. Rita Orr is in New York. BQ is in Florida. So I'm going to be checking out what's going on in the chat at all times. So anytime you have anything that you would like to mention to me, or anything that you'd like for me to look up on the system, or of course any opinions on what we're talking about, please do pop them in there. Hello Kathy, who's tuning in from St. Paul in Minnesota. Hello Becca B, Texas, love it. Hello Joe, Joe's tuning in from Ohio. Marianne is here from Northern California. So really wonderful to have everyone here. Now, if you are looking at this and we're not live, please do feel free to comment in the comment section. That's what it's there for. And of course, we will get back to you there as well. Now, in addition, please do, if you haven't already, please do press on the subscribe button to the channel. And then whether it is me, who's here with Fantastic Female Fridays, as well as the new show that is also going to be coming to your screens very soon, later on this month, called the Tech and ESG Show. You'll know about that. You'll know about Glenn, who's here with us today. You'll know about Glenn's Trending Thursdays. So anytime we go live, the Hot Stocks panel, any of the shows that we go live on, you will know all about. So make sure and hit subscribe, and also make sure that you click on the bell so that you get automatic updates. Great also to see here we have Sandy. Oh, hi Sandy, lovely to have you back from British Columbia. Warren is here from Canada. Jocelyn is here from Rhode Island, and Eamon is here from Grand Canal. Okay. Oh, sorry, Sean is here from Grand Canal. Okay. We have a Grand Canal in Dublin. I wonder if you're about town. So, right. Let's get in and let's get settled into our conversation today. My question today is, and I really want to interrogate this, is there's a lot of conversations and pressure, positive I would say, socially positive pressure on companies to have gender diverse boards, executive teams, gender diverse teams when it comes to presentations, when it comes to project management, when it comes to product development, whatever it might be. There is an awful lot of pressure today in order to make that happen. Now you might say, okay, Susan, well, you're obviously going to have a position on this. Of course I have a position on this. I'm a woman, of course I am. But that's not the position really that I wanted to bring to bear today. Because of course, I'm naturally going to say every team, every opportunity that's offered to anybody should be offered equally between men and women. And also, of course, anyone who is coming from a different perspective on that, I would, of course, understand. But that would be my position, okay? But that's from a social point of view. But we are here today to talk about investing. And we also have to interrogate this from a business point of view. Is to say, but does it really make a difference? if we were to bring more diversity, or when we look at companies that have brought more diversity onto their boards or into their executive teams or a variety of other ways, has that made a difference? Number one, to their bottom line, and number two, to their stock price. And arising from that, then we need to consider, well, how might we invest accordingly? So if there are investable propositions accordingly for those companies, how can we find them and how can we measure that effectiveness as well? And that's the whole genesis of the conversation that I want to have with you today. Now, you might say, well, before you start talking about this, perhaps you need to look in the mirror. And I don't mean the mirror that I look back on, but from the point of view of VectorVest. So I don't know whether you know as much as I know about the company. So I just want to tell you a couple of things here. Number one, I have been with VectorVest for 10 years in August. Glenn, if you're, I would love to know how long you're actually in the company. You might just pop it in the chat there. We'd love to hear you mention that. But I'm here 10 years in August. Okay, so during that time frame, I've seen naturally enough a lot of changes. Seen a lot of people come and go. I've seen an awful lot of people join the company. Naturally enough, I've not met an awful lot of subscribers. Right? Here's my take on this from a VectorVest point of view. So number one, our CEO is female. Her name is Linda Royer, and I had the opportunity of interviewing her on Fantastic Female Fridays during her first ever public appearance as CEO. Glenn is here 17 years. Okay, yeah, I think you're ahead of me there by a little bit. Secondly, the Director of International Sales, who is the person that I deal with most, she also is naturally enough female. And I could go on and on here and I could talk to you about the individual people, right? But I'm sure what a lot of you are going to say, yeah, but what about the overall business? What about, where does that fit in terms of statistics and so on? And I have loads of statistics for you from a general sense. So I don't want to, overwhelm you with that. But I just want to say that, and I had this discussion, by the way, with a couple of people in VectorVest before I thought about coming on here and talking to you about it, is personally, I have never felt ever that because I was a woman that I was held back from any opportunity in VectorVest. I certainly don't feel that. But actually, I don't think that's today's question either. I think the real question is, was I encouraged for other opportunities like the other men in VectorVest have been? And I think that's really where we have to take the pulse on this conversation today. So I thought about that, and I suppose that's why Glenn, I didn't know he was going to be here today, but I'm glad he is, because, I've been given a lot of opportunities in the company to be part of the face of the business. I have travelled with the company around the money shows in America, all over, and Canada in 2017, and I was given every bit as much of speaking opportunities, except on one occasion there was a female specific panel where I was the only person invited to participate. I've also, naturally enough, this show came about, we are now nearly a year old actually, and this show came about because we really wanted to interrogate the issues relating to women and finance, and specifically investment. And when I put my hand up to do it, I was the one that put myself forward, and I said, well, if we look around here, I think I'm the person who has a lot of views about this, and certainly it's something I'm passionate about. And it's something I'd love to do. And again, I was told, off you go. But let's go further than that again. Because there are times when you could say, I've been putting myself forward. But Glenn reached out to me about doing various different shows. And I was the one that was given the opportunity to take his show, Trending Thursdays, a couple of weeks ago, when he needed to go. He could have gone to anybody else. I've been invited to be on the Hot Stocks panel. I've been on all of the summits, all of the VectorVest summits as well. Now, on some occasions, the female voice hasn't been overwhelming. But then again, we also need to find women who are willing to talk about these things. And believe you me, those of you who know, who have been on the show before, you'll know I'm never really short of being something to say. That's part of being a woman, part of being Irish, to come together beautifully. So I wanted to kind of start off on that note to say, I'm not just talking about this, about what should happen out there. I needed to look in the mirror first. And I think there's two parts of this conversation, whether people are being held back, but on the other hand as well, are they being encouraged to come forward? And a hand on heart, I have to say, I've both been encouraged to come forward, and when I have put up my hand to push myself forward, it's typically been welcomed as well. Now again, anyone who's actually in the company and on the show today, I'd really love to hear from your point of view as well, particularly the guys, because I'm talking about this from a female perspective. So, I'd love to hear your views too. And you know what else? You know what else as well? I'd love to hear your views. By the way, men and women need to be part of this conversation. Of course you do. And from an investing point of view, of course you do. So just love to hear your thoughts on this. I feel that the gender diversity conversation is it shouldn't just be, well, there's nothing stopping people. That's a push factor. I think there should be pull factors. Are there things encouraging people? And as I say, in my own experience in this company, hand on heart, I couldn't do this episode if I didn't feel it. I wouldn't do it to you. Hand on heart, I have to say that has been my case. So let me see. I'm just going to take a look over here and just see how the comments are. I see there that the team are interacting there, and that's wonderful. Indeed, Kathy Glenn is so smart. There's no doubt about it. And thanks Glenn for your lovely kind words there in the chat as well. All right. So now let's take a look at some macro figures, right? So let's see whether, when we do have a look into this conversation, when we do look into companies, and I mean, we really needed to do some research here, not just on like one company or 10 companies are in one area. We needed to look all over. Okay, so what I'm going to do is let me take you on a trip around the world. Okay, let's just take a trip around the world here. Okay, so first of all, cash flow returns. When it comes to cash flow returns, now my slides today, I really don't like an awful lot of text, but I just wanted to get the essence of it. So Credit Suisse studied 30,000 senior executives at over 3,000 companies across the world. So all of the research that that has been looked at today, that I wanted to bring to you today, all of the research, I want to make sure that it was authentic and credible and also broad. So among their findings, companies in which women held 20% or more management roles generated 2.04% higher cash flow returns on investment than companies with 15% or less women in management roles. So let's delve into this now a little bit, right? First thing here is there is an understanding here in Credit Suisse and in this research that diversity was established when there was greater than 20% representation. But then the second thing is greater than 20% representation in management. And then the third thing was the actual result here. So we can see if you can deliver 2.04% higher cash flow returns on investment, it is really, really important. It is very important indeed. Okay. So you can see that type of return on investment does make a difference, and it's down to diversity established over 20% and in management roles. Okay, let's go further. Let's go further there. Now, there we go. Gross and net margins. Right, so researchers from the Peterson Institute of International Economics conducted a global survey, and this must be a global conversation. It needs to be. I can't just talk about this in one corner of the world, mine or any of the parts of the world where you're tuning in. So researchers from the Peterson Institute of International Economics conducted a global survey of financial and governance data from 21,980 publicly traded firms across 91 countries. And this study revealed a positive correlation between the presence of women in senior leadership and profitability. Okay, so that was defined as gross margin and net margin. And this correlation proved stronger for women in executive leadership positions than for women on boards. Now, this is another important point. And again, I'd love to hear from you on the chat. And I appreciate there, Glenn, you're taking care of the conversation that's happening in the chat. So when it comes to, I'd love to hear, again, men and women, I really want to hear from you both on this. What's been your experience of appointing women to executive positions? Has there been a pool? Has there been a talent pool who you went to? Have they said no? Have they said no because maybe of lack of confidence, or maybe was there the same attention given? Was there the same opportunities given? Thanks a million, Glenn. So let's just take a look at that. Okay, I'd love to hear from you what your conversation is there, because the thing is, you can't just put people directly into leadership positions. It has to be cultivated up the whole way through. Like Linda Royer, again, our CEO, right? Linda started off as the first ever employee of VectorVest and did everything, customer service, did accounting, product development. Then, of course, was moving up as the company grew, and as it grew beyond, obviously, one employee to where it is today. Then there was naturally more and more opportunities there for her, and she went up through it. And now, of course, she's bringing other people through the position there as well. So we have to remember that you can't, like companies that might just take box exercise. I see this research, right? We got to get some women there into management. you can't just drop people into management because a statistic like that says you should. That needs to be cultivated the whole way up again. And also it needs to be, as you can see here, it's easier, I would think it's easier to appoint women to a board than to an executive leadership team, because if it's a board, well then of course it can be non-operational and more strategic, whereas someone in an executive position then would have a greater workload and greater impact and so on. Again, that's from my experience. Now, also, I want to show you this one. McKinsey then went on and it looked at a global study of more than 1,000 companies in 15 countries and found that organizations in the top quartile of gender diversity were more likely to outperform on profitability, right? So again, global study, this is McKinsey this time, 3 pretty credible resources. Yes, resources are sources. 25% more likely for gender diverse executive boards and 28% more likely for gender diverse boards, okay? However, what's even more interesting is, and I chose to talk about gender diversity today because there's enough in that topic for us to have a conversation about this. We could go much broader in terms of diversity, and many of us have a lot of experience on maybe the lack of it or the presence of it or the benefit of it, and I do too, and I'd love to talk to you about that, but I just wanted to focus on one niche element of it today. So I found here organizations in the top quartile for ethnic and cultural diversity among executives were 36% more likely to achieve above average profitability. But it's actually the last paragraph that really stands out, is what about when they don't? Because now what's beginning to happen is a lot of research has been done on what happens when diversity is in place. But actually what's very interesting is to benchmark it against when it doesn't take place. So it says at the other end of the spectrum, companies in the bottom quartile for both gender and ethnic cultural diversity were 27% less likely to experience profitability above the industry average. And again, that is average EBIT margin. So EBIT is earnings before income and tax. So let's get closer to the area that we would like to discuss today, which is closer and closer to the stock market now, because all of this, of course, filters the bottom line. When you look at business results, this always will fall, it will fall to the bottom line. That's where the attention is going to be. And that's why I wanted to say to you at the beginning of the show today is that the social change around the pressure that socially is being put on companies and organizations to put more women in visible positions, that's not the purpose of our conversation today. Of course, I agree with that. Naturally enough, I agree with that. In fact, I am practicing the fact that I believe with that, the fact that I'm here with you today. But the question is for you, an investment community, well, how does this translate into dollars or sterling or euros? How does that translate? And the only way that they can be correlated then is if you have business success that is generated as a result. So far in the last 3 statistics that we've looked at business performance, business profitability. But of course, as we know, not every business is listed. So let's now go over and look at market value, right? Here we go. Here's market value. So a study of 49 gender diversity announcements from technology companies between 2014 and 2018 found that every additional percentage of women in a company's workforce at the time of the announcement associated with an average 0.1% point increase in the stock price. So, does that really make a difference then? Is that a lot? Well, let's aggregate it. And then researchers replicated this study among 10 financial services firms and similarly found a 1.65% average increase. So you have to think about every time an announcement is made. They're made a lot. They're made a lot, whether it's a new product, earnings announcements, whether it might be a report that is issued from the company or whatever it might be. Every single time that happens, for every additional percentage of women in the company's workforce, then 0.1 percentage point increase in the stock price. And let's finish this conversation now before we get into looking at some investable ideas. Let's finish this now with this one last statistic that I have for you, and that is stock returns. So research analysts from the Wall Street Journal, again, going wide, ranked companies in the S&P 500 based on 10 metrics related to diversity and inclusion performance. These metrics included the share of women in leadership roles, the presence of diversity and inclusion programs, and board demographics. And the 20 highest performing companies in the ranking generated a higher operating profit margin of 12% compared to the lowest ranking companies of 8%. Now, do we need any more proof around this, right? Do we actually need any more proof around this? Personally, I don't think so. I think, obviously, from an anecdotal point of view, I have seen the benefit of diversity all the time in every single business interaction that I might have. And that's why, the team that I work with in bringing this show to you, obviously you all know Joy. Hi, Joy. You all know Joy. There's other people behind the scenes as well who you may not know. And then there's also the fantastic Melissa who works in social media. And then, of course, there is, as I mentioned, the Director of International Sales who I work with in strategy. And this gets fed back up right up to Linda as well, our CEO. So therefore, when you put all of that together, unless we had all of those people, unless we had the varying different opinions of people about what might work, what might not, when would work, when would not, logistically, the tech that's best, the tech that's not, unless we were to have all of those voices around the table, I don't think that we could come up with the outcomes that we do. That's, again, a feeling that I personally have. But when it comes to translating it to stock returns, that's where we need the statistics. That is, there. Joey is now saying hi. Hi, Joey. And anyone who wants to say Joey, say hello to him. He's absolutely brilliant. I know you rarely see him, but he was there on the button today, checking in with me, making sure all the tech was cool and was good in the hood. And great to see that. And thanks a million, Joey. You're always totes amazeballs. Right. So let's turn the statistics into an investable case. Where do we look to next? So I've done, again, some research for you. I couldn't just rock up and have the chats, could we? Well, we could sometime too. That'd be good too, wouldn't it? But what I've done here is that I've got some ETFs for you. And the reason that I have picked some ETFs for you is these actually give us the starting point, or maybe a finishing point as well from an investable point of view. But we have to be critical here. We do have to be critical here as well. We have to understand now that we know that there's a business case, let's now critique this from an investment case. Is there an investment case? Because we need to make sure all the typical things are in place that we might always want. And so we're going to take a trip around that. And then we're going to, after that, then we're going to head over to the VectorVest system. And we're going to show you how to look under the hood there as well. Okay? Now, so as I look over here, it looks like I'm looking the opposite way to you, right? But anyway, I am. So the screen is over here. And this is one that I want to show you. Now look at this sparkling year-to-date performance here. 14.41% of a year-to-date. So this one is an iShares. Okay, so this one is... you love ETFs, Margaret. Yeah, I have to say I'm a big fan of them as well, particularly when you're trying to achieve a certain objective. If you want to use stocks efficiently in your portfolio, and so many other reasons. So I'm a big fan too. So this one, the open ETF, so it's the iShares Refinitiv Inclusion and Diversity ETF. You can see here it's accumulating. Okay, so it doesn't give out a dividend. Share price here is $7. And I'm just going to scroll up now here a little bit. So let me just zoom in, right? Just zoom in there over my head. So what is this ETF? So it's a competitively priced. We'll decide whether it's competitively priced now or not. It's competitively priced and diversified access to companies that demonstrate high levels of diversity, inclusion, people development, and low news controversy. So I found this quite interesting, is that it's not just about diversity from a pull point of view, it's also actively avoiding other issues too. So it invests in next generation companies across developed and emerging markets. So we've got some, global diversity there. And I know you're going to hear the word diversity a lot here, but I mean it from a variety of different perspectives. To have the potential to foster innovative environments leading to long-term growth. And number 3 is that it can be used to diversify a global equity portfolio and gain exposure to a long-term potential growth trend. Another thing I want to point out to you as well is that this ETF is, it does hold equities. Okay, so it would be exposure to the stock market. Now, it's pretty new, right? It is pretty new. We'll discuss that there in a moment. Like, the performance has been absolutely sparkling here. When the stock market fell like everything else did, as you can see, it really has delivered a huge return. From 2020 to 2021, it delivered 54.89%, right? Which, right, great. Let's stay critical though. Let's stay critical. Let's not just go, okay, right, boom, that's brilliant, let's go. Let's stay critical. We need to make sure that certain points are in place before we can go any further. Okay, now again, as you can see here over my head, the reinvestments By the way, it's Joey works his magic to make sure things like this can happen over my head. But you can see here the reinvestments. So this doesn't distribute any dividends, and therefore, if you are somebody who maybe is in a pension, or maybe you're in a high tax environment, you may want to find an accumulating ETF. Okay, so if I keep on going down, then here's some other details. Now, the one challenge there is with this ETF is that there's only 31 million in it. And that's why I'm saying, it is important to stay critical. A sparkling performance, no doubt about that. But with the net assets of only 31 million, that can have there may be other things that we'll have to take into consideration. And we'll do that, okay? We'll do that. So I just want to give you the whole warts and all story here. Now, it only began the 7th of September 2018. It's only 2.5 years old. And here is the cost of it. It's 0.25%. Now, where does 0.25% come in? Because iShares tells us it's competitively priced. It actually is. If you go to the Vanguard ETFs, they're much more they're much cheaper. Sorry, they're like cents in the dollar. You could have a 0.03% total expense ratio, or you could have like 0.07%. It could be very, very small. But on the other hand, a lot of the iShares ETFs I've seen to be significantly higher, particularly if they are tracking an index that isn't something like a CAC 40, or isn't something like a FTSE 100, or isn't something else like that. So just to bear that in mind, is that this actually is quite competitively priced. Look where it's domiciled, so it has to be good. I know a lot of the European ETFs are domiciled in Ireland. That's because Ireland is pretty good at ETF thing. Okay, so we can see methodology, its usage, that's just a regulation, and no, we knew about that already, that there isn't any distribution frequency. Okay, so 4.5 million shares outstanding, PE ratio of 17.43, so offering some interesting value there. And here's our sustainable characteristics. Now, when you, and I hope you all will join me for the ESG and Tech show in a couple of weeks' time. It's going to be coming up pretty soon. And again, any of you that are subscribed to the channel, you will know. So subscribe and hit the bell. You'll know about it as soon as it goes live anyway. But if you could, or sorry, when I do talk to you about it, there, this is one of the key things that iShares is, and it's taking a lead on this, is the sustainability characteristics of ETFs. So it's not just of stocks, it's of ETFs. So here, the rating here is very, very high. It's AA rating. Out of 10, it's at 7.37, and that covers 98.06% of all of what's in it. Okay, so that is it's a very, it's a really important point to make. And iShares are doing this, they're doing this very well, and I think we'll see more and more of that. And that's why I do believe that here at VectorVest, I think we should take the lead on the sustainability and technology conversations. And guess who put her hand up to do that? That's right. Indeed. So you're going to be seeing a bit more of me over the next while. But again, I'm going to make sure and reach out to all of the other experts right across the company and bring their insights in as well. It's been really exciting developing this show, actually. And it's also been interesting. Can I tell you something else about this? It's been interesting as someone in Europe, specifically in Dublin in my case, comparing the views we have around sustainability and technological advancements with the team in the States. And that's what I love about the geographical diversity of our business as well, is that we have the chats about that. So we'll be bringing all of that to you in a couple of weeks' time. Oh, thank you, Margaret. Margaret's going to be there, and hopefully lots more of you will be as well. By the way, if you want to know more about that, if you can I ask one, either Glenn or Joy or whoever's there moderating for the VectorVest team, could you just put in VectorVest.com/FFF so that people know that's the specific mailing list for this show and for the ESG and Tech show. So just if you want to know the details about that, we'll just make sure for any of you who isn't on that. So if you could to Joy or to Glenn or whoever might be on VectorVest.com. Glenn, thanks Glenn. VectorVest.com/FFF. I'd really appreciate that, and thank you. Okay, now let's keep moving down here. So business involvement. Okay, now this ETF actively, thanks a million guys, thank you. This actively also does not invest in certain areas, like controversial weapons, nuclear, civilian, tobacco, thermal coal, and oil sands. Okay, so you can see there 0.73% of the fund is in this. Do you know? Can I just ask you all though, right? For those of you who are joining in, tell me, are you looking at these factors when you're making your investments now? And it's like totally okay if you say yes or no. I don't mind at all. What I'm struck by is the fact now that iShares is putting more and more effort into this. So I'd just be interested to hear from you all. Are you looking at these sorts of factors? Is it something that you're interested? Is it something that you're interested in looking at? Have you even noticed? For those of you who might look at this, I'd be interested just to hear from you. From that point of view. So that would be great. Okay. Now I'm just gonna scroll on down there. Registered locations. Now here is where the cookie is about to crumble. What or who are the companies? Andrea says, not yet, but starting to pay attention. Yes, you see, Andrea, this is the point, is that I think more and more investors are. And it was something that I brought up in at the summit, actually, when I spoke on it there a couple of weeks ago, the word on the street is that sustainable investing is going to overtake traditional investing by 2025. I've seen shades of it. I wouldn't necessarily say that that's a definitive date, but what I am seeing more and more is that at an institutional level, this is now being demanded because it's coming from individuals, which means from a retail point of view is that voice is going to get louder. And that's why I do believe we should take a lead on this. So we should be having conversations about this here at the forum of a show like this, where we can at VectorVest bring you the latest trends and the insights on this, but also it must always come down to the investable case. So BQ says, I haven't knew at this. Well, you're in the right spot there, BQ. Kelly says Kathy says definitely interested. You see, yes, Kathy, is that it's gaining more and more attention. This theme is, and the way if people invest in ETFs, they invest in what's underneath. Is, remember, therefore sustainable ETFs. If people are pursuing sustainable ETFs because they're sustainable, well then of course that's going to increase the demand for the stocks that are underpinning those. So companies want to be meeting these index requirements, and therefore it's this is where money is driving the bus here. So it's one to watch from an investing point of view, and if from any other point of view as well. Sandy said, haven't so far, but I'm very interested. You'll see it, Sandy. You will see it more and more. Julie says, very interested in looking before I found VectorVest. I certainly looked into these issues. Yeah, Julie, and we'll see. We'll see different ways of looking into them as well. I've been talking to the team about that, and as time goes on, we'd love to hear more and more of your input. Kat said, getting better at looking with your help, of course. Thank you very much for the way. My thanks to you, Kathy, because I'm here because you're here. So thank you. And Margaret said, yes, becoming more and more important. You see, the thing is before, Margaret, right, is people thought I could either invest according to my values or to the value I'm looking for in the market. No longer the case. Now we really see the two meeting in the middle, and it's driven. It's becoming a bigger and bigger trend. Okay, so now when we look at the companies here like Stellantis, Gap, Allianz, HP, Infosys, Owens Corning, SocGen, Society Générale. If anyone is watching Call My Agent on Netflix, it has improved my French accent immeasurably. It's a great show, I have to say. I'm really enjoying it. Louis Vuitton, of course, Manpower, ironically, and Fortescue Metals as well. So there are 10. And how many stocks have we got all together? What's the number of holdings? I didn't actually check that, and I like to check that because I don't like anything. There we go, 97, right? So there's 97 stocks in here. But also what I'm interested to see is that there isn't a huge weight on any one particular one of them. Like as you can see, the greatest weight here is 2.81%. Be careful about that when you're buying ETFs to make sure that some ETFs have about 50 stocks in them, and there can be 10% in one of them, and that's very concentrated, very, very concentrated. Okay, and there we can see the exposure breakdowns. We've got some, pretty good geographic diversity there as well. The US 30%, France 9%, Australia 9%, Germany 7%, Canada 6%, United Kingdom, and so on from there. So there's an example of one ETF where we can take diversity, and we can. No one would be turning their nose up anyway at a 54% performance since this time last year. But as you can see here, even a 14.41% performance this year. Now, I am not somebody who says buy something because when you look back it did great. You know as well as I do that's nonsense. There's no point. There is no point in saying, well, it should keep going because it kept going before. No. I'm looking at the business case for diversity. And I'm looking for how the business case for diversity falls to the bottom line. That is what is underpinning my interest in this from an investing point of view. And that's why I think this theme deserves mention. Okay, next one. Now I'm going to take you over here to UBS, okay? So this one is called, it's the UBS ETF, Global Gender Equality. And this ETF, the ticker code is, if I'm correct, it's L, isn't it? E-L-L-E? Pretty sure it's L. No, it's not. No, L is the other one. I'm going to show you that one as well. Thanks, Glenn. Thanks so much. You've got to do the strategy of the week. Take care, Glenn. See you again soon. So this ETF is called Gender, Gender. That's the ticker code. Okay. So you can see here the stock here is $17.38, $17.38, and we can just, if I scroll on down here, you can see the fund profile. Let me just scroll on down here. You can see that the asset class here are equities. Again, it's based in Ireland. The launch date is in 2017. Another thing to point out to you all as well isn't it interesting how much more attention these themes are getting in recent times? This isn't a theme that has been around for a long time from an investing point of view. Do you really think that any of these entities would go towards creating a fund to enable people to have exposure to these types of investment themes if they didn't feel that investors felt it was investable? I rest my case. Okay, so we can see here the currency of the share class here is dollars. Let me scroll down here. Shares outstanding 2.9 million. Okay, around about half what we saw in the other one. And then we see, okay, now these are the key benefits here. All of these are broadly speaking, they're just benefits of ETFs anyway. Management fee here slightly lower, okay, 0.2% over here. So the total expense ratio is 0.2%, and the one I just showed you before that was 0.25. Okay, so let's take a look now over here at the index information. Let's see what's going on here. Okay, so there's the index. 99 stocks. Index has been designed to track the top companies leading the field internationally in terms of gender equality. In-depth gender equality screening as defined by Equilep is carried out. And then also companies which derive the majority of their revenues from the controversial, all of those again. Also companies that are not compliant with the UNGC and OECD guidelines are not considered. So two things happen here. One is negative screening. So negative screening is when something is actively not included or excluded. And then there's also the identification of the ones that would perform the best according to the metrics of the index. So let's just see now, how has this ETF been performing? There you go, there we go. Okay, so the fund here has been performing 22% over the past 2 years and 19.37% over the past 3 years. Am I correct in that now? Let me just check. Yeah, okay. So that has been the volatility. Yeah, that has been the volatility. Sorry, it's not the performance. So as you can see there, the volatility is quite, it's quite significant. That would be on a par with any of the type of specialist ETFs that you're seeing out there right now, according to possibly some of the green energy ones, some of the commodity ones. So it would be pretty much on a par with that. Bearing in mind, of course, that we do also know that that the volatility of anything was going to be dramatically increased as well over the past year. But all the same, it is something that we need to take consideration of. Okay, let's go into the trading information. And now we can see over here that the trading currency in London is GBP. So it's sterling, whereas on the Swiss exchange it's trading in dollars. Remember, UBS is a Swiss company. So and I'm just going to let me just want to get the fact sheet here now as well. Aha, here's what I'm looking for. Here is what I'm looking for. Now here's our performance. 57% again in the past year. So I did think it was quite low. The volatility number, so that's why I thought it was a bit out of kilter with what I had anticipated. So here you can see the fund has delivered 57% over the past year, and per annum over the past 3 years, it's been 12.93%. Now, typically the market does about about 8 to 10% compound per annum. That is what the market does broadly. And do you know what I'm going to show you as well? Just so that you have this, I find this really helpful. It is the BlackRock, interactive charts. I was looking at this earlier on today, the BlackRock return map here. Let me show you this. Now, this here is all of the different asset classes over all of the years, right? Now, I know that just looks kind of crazy there. Let me just, isn't that cool? Isn't that just cool? So here is the return, for example, in equities, in European equities last year was 5.4%. In Japan, it was 7.3%. US equities last year was 14.3%. Okay, now that obviously is in the calendar year. Sorry, this is so far this year, apologies, but it's annualized. Those figures are annualized. Let me go back. Now I'm going to fix this again. That's the figure annualized over that period of time. So that's the average, okay? So the average return there of the US stock market is at 14.3%, okay? And therefore you can see there last year, US equities were 11.2. The year before they were 21.4, and so on like that. So I can, what I'm going to do there is, I can't put it into the chat right now because I'm live, but I will put it as a comment afterwards so that you can see that resource. It's super handy. Anyway, if you just Google BlackRock interactive charts return map, you'll get that. And I just find that it's really helpful just to take the pulse of the market. Okay, so now if I head back over here. So again, 57% was the return over here. Launched it, we had a look at all this 0.2% and so on like that. I just also want to get and here we go. So it is 10% in Australia, 9.3% in France, 4.6% in Canada. Now I think, but I couldn't be sure, I think 3.3% of that is in Norway. 2% is in Hong Kong, 2% is in the Netherlands, 0.9% is in New Zealand, and so on from there. So SocGen, look at the positions here. SocGen, Société Générale, General Motors, ITV, Hartford Financial Services, Nielsen Holdings, Taylor Wimpey, Citigroup, Bank of America, MetLife, and WPP. And here is where we can delve into, and that's what we're going to do as towards the latter end of the show, is we're also going to delve into the companies. We're going to create a watch list arising from the top 10 positions in some of these ETFs. And let's just apply our VectorVest layer to these ETFs as well. And let's just consider what we can do from there. Okay, now the next ETF, I have two more for you. This one here is Lixer. Now this one is called ELLE. Okay, so the first one was Open. The second one is Gender, GENDR is ticker code. This one is ELLE, as in the French word for she. Très bien. Merci beaucoup, Cathy. Honestly, call my agent on Netflix. Recommendation. It's really good. It's in French and it's all about this Parisian agency. And honestly, when I watch it, I start thinking, je pensais à français. Okay. Now, all right, I'll stop that. Okay, so here we go now. This is the Lixer Gender ETF. And this one now, 36 million assets under management, considerably more than the first one I showed you. Considerably more, about 3 times as much. TER, again, is over here at 0.2%, okay? Now, there you can see the performance. This one, it is 3 years old. Okay, and here is the cumulative performance, which isn't amazing. It's not amazing here of 41%. Thanks, PQ. It's not amazing here in terms of the performance of it over that period of time. Now that's cumulative, whereas the calendar performance here was only 7.07% in 2020. And yeah, we haven't got an awful lot of other data here. So we just need, we do need to be, that's what I mean, is still be critical. Always just look and see where, like, what is the company investing in? Or what is the ETF investing in? We know the idea, but in the last 2 ETFs I showed you, drastically different geographical reach, drastically different, very different companies. So it is worthwhile when we're not dealing with something like as plain vanilla as something like the S&P 500. So we do need to be critical, and of course we can use VectorVest to help us with that. Now, doesn't distribute any dividend. Now let's take a look here at what is in here. Kathy says, when I went to Germany, I began to dream in German. God, I love languages. Yeah, and I mean, it's just brilliant. I have to say, I'm enjoying it. C'est très joli. Right, here's the top. Now, not the top 10 index constituents. I want to see the top 10 fund holdings. What are they? Nordstrom. You will see some overlap here. Tapestry. Royal Mail. SocGen, Society Générale. Publicis Europe. Gap. Again, ITV. Unilever. General Motors and Keycore. So now at this stage we've seen Gap a few times, we've seen SocGen a few times, we've seen General Motors a few times. Here is where we could now start thinking, okay, is the ETF the right one? Is that the one to look at, or should we take our lead from these ETFs and consider what stocks might suit us best? This is where it comes down to personal preference between whether you want an ETF to invest or whether you want to look at individual companies, because if they're in here, well, then they're practicing the very business practices that can lead to a better bottom line anyway. So it's just, then we might from here say, okay, I'm going to take a selection of here. I'm going to look at 4 ETFs, and from there, I'm going to identify for myself which ones I see in lots of different places because they have different screening criteria. And then what I'm going to do is apply maybe the comfort index, maybe relative safety, maybe relative timing. Maybe I can see all of those and then apply my own layer of analysis after that. Okay, now let me go on here. 148, sorry, you can't see that. 148 constituents over here. And when it comes to this ESG rating is actually BBB. ESG score here of 5.52. Here's what I'm saying to you now is that, and this is something we're going to be watching as time goes on, is when it comes to people, when it comes to individual companies coming up with how they measure ESG, that is not yet uniform. In fact, there is still agreement pending on what ESG standards actually are. So we need to take the pulse on that as well. So we can take a look here at the ESG report. Let's take a look here. And that is, here we are. Okay. Now, a lot of detail here. Great. So where is it working on? So here's where it comes up with the 5.7. Is that the score here? Can you see that? So from an environmental point of view, the score there is 6.4, and that's arising from climate change, environmental opportunities, natural capital, pollution and waste, social, human capital, product liability, social opportunities and stakeholder opposition, and ESG then is at 5, G, the G of governance. So so we can see more and more, as you can see, that these types of reports are coming out. So portfolio related, it says that it's, or over here it says the portfolio is AA, and therefore the ESG industry score adjusted therefore is 7.2, and which is better than the MSCI World. So that is the type of a different way. That's the way Elixir is comparing this in comparison to iShares, for example. Okay, going to show you one last one, and then let's pop over to the program. And this is the one that I profiled at the summit, and this is the SHE ETF, right? So again, the ticker codes are open. No, this one is open. This one is gender. See there, Global Gender Equality ETF. This one is LELLE, and then the one over here is SHE, SHE, right? There it is. There's the ticker code up there. So in this one, a lot more money. Now here we're dealing with 229 million assets under management. See why I left it until now is that I wanted to show you that that this is, I wanted to bring you the one that gives you it's got the longest. This one has a 5-year time frame and track record. It has an awful lot more money in it, as in actually invested in it. So I wanted to take you through this here as well. Let me just open up the fact sheet here for you. And as this loads here, there we go. Okay, so Spider, this one by the way is from Spider, it's from State Street. So the Spider SSGA Gender Diversity Index ETF seeks to provide investment results before fees and expenses that correspond to the total return. Total return, of course, is both stocks and stock price changes as well as dividends. Seeks to provide exposure to US companies that demonstrate greater gender diversity within senior leadership than other firms in their sector. Companies here are ranked within each sector by 3 gender diversity ratios, and it also seeks to minimize variation in sector weights as well, because I'm sure you can all see that there would be that certain sectors are quite female dominated and certain sectors are quite male dominated. So you could have a lot of sector disparity there. Kathy says, loved your summit presentation. You're very kind, Kathy, and thank you. And that's going to lead us right in to the Tech and ESG show in a couple of weeks' time as well. I'll be delving into this whole sustainability area in lots more ways. But again, from an investing point of view, from an investability, we can talk about social trends, technical trends, technological trends, and legal and economic. And believe me, I would only love to do that. But when we're here together and you're investing some of your life to spend it here with me, I'm going to make sure that we're talking about investing in particular. All right, so here we go then over here on the right hand side. Look at this. A 1 year annualized performance is 60. Okay, well, let's go. Market value is 62%. Like, wow. 62% is what gender diverse SHE ETF delivered last year in the past year. But I think though, that's all crazy and everything, right? It is. But what we really need to do though is to consider the longer track record, because that is, the longer term is more representative of what can happen over a longer period of time and can point us to the average. So here we can see that over the past 5 years, the market value here is at 13.94%, but particularly if we go since fund inception, we're at 14.43%. 14.43%. Now, bear in mind, the very first, if I go back here to the statistics that I showed you, just think about this now. Sorry, go again. There we go. Market value, yeah. Just remember here now is, when we look at stock performance, is that research analysts from the Wall Street Journal ranked companies in the S&P 500 based on 10 metrics. And look at the number there. The 20 highest performing companies in the ranking generated a higher operating profit margin of 12% compared to the lowest ranking companies. Okay? Compared to the lowest ranking companies. So we can see that there is a difference when it comes to this from a stock return point of view. When we annualize all of the data over the past around about 10 years, and admittedly it's been a crazy 10 years in the market, the annualized return on US equities is 14.3%. Japanese has been 7.3%, Europe equities has been 5.3%, and emerging market equities has been 4%. In contrast, the SHE ETF since its fund inception is at 14.43%. There we go. You see, this is the one that has the biggest amount of money in it. And I've picked three. Four ETFs. And I mean, there aren't exactly a huge amount to pick from. I'm bringing you what's out there. And the results are pretty consistent. These results are sparkling. But they have to be driven by something. And that's what I'm saying. I'm not talking about these ETFs. I didn't say, let's talk about the top 4 ETFs that delivered over 50% last year. Not interested in telling you about that because it's last year. Last year is gone. What I'm interested in talking to you about is the key underlying common thread that I'm seeing here that is genuinely, I believe, an investable case. All right. Now, gross expense ratio, again, up at 0.2%. And also, if we keep on going down here, the estimated 3 to 5 year earnings per share growth is 19.99%. And here is where I want to bring you to the VectorVest program, because you and me have an extra superpower when it comes to this, because we can check out. We can do it for all the holdings, of course we can, but we can particularly do it for the top 10 holdings. And let us consider what the earnings per share growth rate is, because we have our own way of doing it. Oh, yes, we do. The dividend yield here is at 1.27%. Now, I want to show you, though, that's the actual, do you know what? Rather than me talking anymore from the fact sheet, I'm going to bring you over to VectorVest and let's start looking at it over here. But average market cap, 136 billion. And I just want to have these open up here. Texas Instrument again, Disney, Johnson & Johnson, Visa, Netflix, called my agent, Nike, Intuit, Wells Fargo, and Square Inc. Now, is our geographical diversity here? I'm not sure. Don't think so. Okay, I don't think it's here. Is it back here? Let me see. Okay, let me go back up there again. Does it say it here? Oh, okay. There it is. Sorry, US companies. Yeah. Seeks to provide exposure to US companies. That's why there isn't any geographical exposure. All right. And then again, though, on the other hand, is that these companies are these companies like Johnson & Johnson and so on. All of these are global companies anyway. I think we'd probably all agree on that. So let's head over to the program for a moment. Okay. Let's head on over here. Okay. And let's take a look here at what's happening. Okay, so I've opened up the US program, and of course you can use whatever program you would like to, because of course they're all there for you. They certainly are all there for you indeed. They're now available to everybody with every subscription, which is brilliant. So if I go in here into the viewer and I go to the stock viewer in here, and I'm now going to look for She may be the beauty. Okay, I'm sure you're not here to listen to me sing. So here is She, and if I right click now, okay, I right click and I look at the full stock analysis report. I just want to give you some extra context on that dividend. There we are. There's the stock analysis report. I just want to bring it down there to the dividend. div. Yeah, there we go. Oh, okay, let me go down again. Dividend yield. Here we are. So the index yield is actually higher than the fund yield at the moment. That can sometimes happen due to reallocation and things like that. So She has a dividend yield of 1.1%, which is above the current average of 0.79% as well. So in comparison to the other three that I showed you, all of those don't have dividends. She does. So She is an ETF that does. But I also wanted to bring this to your attention as well, is that whole idea of checking out the nature of the companies that are in it. So if we scroll down here, right, I'm going to create from this, see all of these here, right, these top 10 holdings. Let's create a watch list, and we're going to do this as we bring today to a close. Becca B, yeah, okay, so Becca B, just to tell you, the ETFs I discussed today are Open, okay, OPEN, Gender, GENDER, LELLE, and now I'm talking about SHE, SHE, okay? Now, what I'm going to do now, though, is let's create a watch list of the top holdings, and let's take the VectorVest pulse on this. So I'm going to go over here to watch list viewer, and I'm going to go into my watch list, okay? And in here, I am going to make a new watch list, and I'm going to call this the SHE ETF top 10. And I'm going to press add. Okay, there it is, SHE ETF top 10, and I'm going to press add. Right, here we are. Now, next thing I'm going to do is, I'm just going to call out the list here. You can check this anyway for yourself, but I'm going to call out the list here. It's just, it'll get distracting. Can I put the two of them on the one screen? Oh, I can. Right. I just want you to see that I'm doing exactly as I say I'm doing. So here are the holdings, right? So we've got PayPal. We've got PayPal. We've got Texas Instruments. Okay. We have Visa. If I'm correct now, Visa's ticker code is just V. If I'm correct. Yeah. Visa, Disney, DIS. Johnson & Johnson is J&J. So DIS is Disney. Johnson & Johnson is J&J. Netflix is, I'm never 100% sure of that. Okay, there's Netflix. Wells Fargo. Wells Fargo is here. Wells Fargo, Intuit. INTUIT. Yeah, Intuit. Nike, Class B. Okay, that's fair enough. Nike and then Square. So Nike, NKE. Nike and Square Inc. Yeah, there we are. All right. Thank you, She. I'm just going to move you over here now. And now let's take a look on this. And by the way, if anybody has any further questions or comments or anything else, pop them into the chat. Pop them into the chat and I'll be delighted to see them. Kathy says investing and singing should be paired more frequently. Yeah, I'm not sure if my husband would agree with you, because I kind of have, there you go, I always have a debrief with Linda after this, by the way, because she loves to hear about Fantastic Female Fridays. So you can see that appearing there in my notifications. So you can see over here now, there we can see the value, we can see RS, RV and RT. Now we can of course look into each of these stocks. We could, the market is live. That's why you see a lot of activity happening here. But can I bring your attention right down to the bottom of the screen? Just come right, see literally come right here beside my glasses. Come right here beside them, okay? Right over here. Look, just look over here. Here's where we're going to put some attention on this. RV, our RV is 1.09, so we've got above average relative value, okay? So that's stock price appreciation potential. RS is significantly higher. Our relative safety, which is the consistency and predictability of financial performance, is significantly higher, okay? RT is telling us that this is the magnitude, direction, and dynamics of the share price. So what this is telling us is that, thus far, our graph, our collective portfolio here, has been either flat or else a trend has been changing, okay? Now, VST, though, is pretty darn strong. It's at 1.16. And look at all these beautiful numbers here. VST, every single one of these top 10 stocks, top 10 according to the SHE ETF. Remember, it's picked based on its diversity. Very, very healthy looking numbers there. Disney slightly lower. Yeah, okay. We'll keep looking there. Now, further than that, then we see the CI is a 1.45. Now, any of you that know me, and the more you come to the show, believe me, the more I'll tell you about me. So you've no choice but to get to know me. And I'm a big fan of CI, which is a comfort index. It's a stock's ability to withstand severe and or lengthy price declines. Now, if anybody wants to get a free stock analysis of any of these stocks, by the way, if you're not a VectorVest subscriber, of course you are so super welcome to do that. You can do that by, we'll ask somebody there in the chat, in the chat there to put the link in there for free stock analysis. But also, of course, if you would like to take a trial, I'm sure that there's been a link in there somewhere around taking a trial. If you want to take a trial, you can take all of this. You can get in and look at all of this for $9.95. You can sort that out as well on the VectorVest.com website. Just in case any of you are wondering, okay, how did I go from ETFs available to everyone over to here? That's how. Those of you who have got VectorVest, you know exactly what I'm doing. Okay. Now, if we go on over then, I see the growth rate here is at 14%. So the growth rate on average of these top 10 stocks is at 14%. And I see the PE ratio here is at 43.4. Where's that being driven now? 43.4. Who is driving that up? Square here has a PE ratio of 193. So that's where that's coming from. Okay, and then the dividend yield here is at 0.58%. So clearly, since the fund itself is a 1.1% dividend yield, clearly there's other dividend payers within there that we could go and take a look at. And on and on and on and on I could go there from there. I could analyze these to my heart's content thereafter. That certainly is something that I can do. A final point on the SHE ETF, or of any ETF, is the great thing about ETFs is you can see exactly what's in there. So when I look here at the holdings, I can download all of the holdings, right? So I can go over here to the first quarter and I can actually see all 178. I can see everything. I will be able to go in there and I will be able to see absolutely everything that's in there. So, and that's the great thing about ETFs is you can see right, you can really and truly can see right through them. Okay, so on that note, I'm now going to thank you so sincerely for spending the last hour with me. And I hope you found this session useful. Thank you very much indeed. I see VectorVest has now put that in there. Thanks a million. So they've put in both the link to the free stock analysis for any stock. Even if you want to get a free stock analysis for the SHE ETF or anything like that, go right ahead there. And if you want to try out the system, of course you can as well. Those of you who are subscribers, you know that you have access to all of this all of the time, as well as all of the other education that happens. I would really love if you would. I'd love if you enjoyed the content here today. I would really love if you would give us a like if you would like this video, so that then other people who might be considerate of looking at this content will find it quicker. I really, really appreciate that. And of course, like I say, in case you're watching this and it's not live, please do feel free to put a comment in, and the YouTube team is very vigilant. So if there's anything there for me, I'll get back to you. If it's anything there for VectorVest, of course, we will too. But I really hope you enjoyed today. I loved this episode, and I'm enjoying this show actually more and more. I really am. I'm enjoying the show more and more and more all the time. I love talking to you about these. And you know what I love to do with you though, is I love when you interact with me and you tell me your thoughts, and where we pick out certain niche areas and where we uncover investable opportunities accordingly. So on that note, have a truly wonderful weekend, and I'll see you next time, either for the ESG and Tech show in a couple of weeks or for the next episode of Fantastic Female Fridays. Thanks everyone. Have a lovely weekend. Goodbye.